Good evening, and welcome to the Nightly Market Brief for Thursday, June 4th, 2026. Every night, we break down the verifiable macroeconomic facts that fueled the moves during today's session. We saw a massive game of musical chairs on Wall Street today as big institutions aggressively moved cash out of technology and poured it into blue-chip industrial stocks. The S&P 500 E-mini managed a steady 29.25-point gain to close at 7,601, but that quiet number hit a huge split under the surface. Fund managers aggressively dumped high-growth tech shares, causing the Nasdaq 100 to tumble 145 points. They took all of that cash and immediately plowed it into traditional value companies, sparking a massive 868-point surge in the Dow Futures Mini, which finished at 51,671. This huge shift was triggered by a soft weekly unemployment claims report and ongoing budget debates in Washington. The energy market had a major sell-off today, completely erasing its recent premium. Front-month WTI crude oil crashed $2.98 to settle at $93.04 a barrel, while gasoline and heating oil followed it straight down. This drop happened because energy traders are actively pricing in solid diplomatic progress toward a Middle East ceasefire, forcing big hedge funds to quickly dump their long positions. On the flip side, natural gas managed a small 0.122 gain, as utility data showed tighter storage inventories. Over in metals, gold and silver caught a strong wave of buying. Gold futures surged $38.1 to settle at $4,505. This turnaround happened because the U.S. dollar index pulled back to 99.382 as the softer jobs data made safe haven assets highly attractive again. While paper traders jumped back into the market, physical gold held a firm floor due to steady buying by global central banks, while platinum locked in a solid 25.3-point gain. The biggest collapse of the day hit the crypto market, where Bitcoin futures were hit with heavy selling ahead of tomorrow's big labor data. The main contract plummeted 1,790 points to close down at 63,795 as algorithmic trading desks quickly cut down on risk, while Ether futures suffered a parallel 26-point drop. The bond market had a steady relief rally as interest rates cooled off. 3-month SOFR futures rose 0.035 points to settle at 96.145, while 10-year Treasury notes notched a solid gain to close at 109.5938. The softer unemployment numbers dragged yields lower, giving the broader stock market some much-needed breathing room. Finally, grain markets faced a tough session. Soybeans fell 24.5 cents to close at 1,129.5, and corn dropped 7 cents. The latest Department of Agriculture data confirmed that spring crop planting is moving incredibly fast and is well ahead of historical averages across the Midwest. Right now, the entire financial world is completely focused on tomorrow morning's official government jobs report. To help you prepare for the wild market swings ahead, we have linked 2 critical tracking tools from the CME Group right in this post. You can check the full data schedule on the CME Group Economic Releases calendar and see exactly how big institutions are pricing expectations by reviewing the CME Group Employment Expectations tool. To break down what these huge cash shifts mean for your portfolio and how to protect your capital before tomorrow's numbers hit the tape, here is our senior analyst, Alex Thorne. Alex, please brief us on some of the tools linked in this post.
Thanks, Michelle. Today's massive 868-point explosion in the Dow, combined with the huge exit out of technology, proves how fast institutional cash can shift in a single afternoon. When you see a crazy move like that right before a blistering hot services report, the message from the bond market is clear. With December interest rate futures forcing a 3.89% yield projection, the big players aren't just betting on higher borrowing costs, they are actively positioning for rate hikes. If your core stock portfolio is completely unhedged while these indices trade near record highs, you really have to ask yourself why. Relying on basic diversification while inflation creeps higher is no longer a safe option. It is time to get a defined risk strategy on deck before the next major yield spike fractures your principal. To help you track these massive cash rotations with total data accuracy, we have provided two critical institutional tools linked right in this post. First, click on our comprehensive 40 market report summary for a raw, market-by-market briefing detailing exactly what is fueling capital flows across the indices, metals, energy, currencies, interest rates, and agricultural lanes. Second, access our interactive EMA analysis page. This specialized workspace gives you step-by-step instructions for easily determining short, intermediate, and long-term trends. No password or registration is required to view our terminal charts, active futures and options quotes, and our overall technical opinions. But required viewing charts and indicators is only the first step. True capital insulation requires precise execution. If you are ready to remove subjective guesswork from your trading desk, contact Peter directly to schedule a one-on-one online review and learn how to put our team directly to work for you. Thank you for watching. Good trading, and we will see you right back here after tomorrow's regular session settlement.